Hey everybody, Brian Shannon here from alphatrends.net. It's Friday, the 12th of January, and the S&P and the Nasdaq are now positive for the year. The market that was supposed to outperform this year and still may, the Russell 2000 is down 3.7%. So, just don't buy into the narratives. Wait for price action to tell you what to do if you're looking to get involved in certain sectors and industries and areas of the market. You want price action to dictate what you do in the market, not headlines. Bitcoin fell back a little bit here after their approval of the ETFs, that is. We'll take a look at, in particular, Ethereum here because that's what I've been talking about most lately. Let's take a look at these markets, though. The S&P 500, as mentioned, is now positive for the year, and this is a new closing high since this move began in October. We continue to close in on the all-time high, which is up here at 479.98. So that the market seems like it is magnetized towards. However, it's not making it easy in here, as we can see over on the right with this 30-minute time frame, meaning each one of these bars represents 30 minutes of data. We're above that week-to-date volume-weighted average price, the orange 5-day moving average, and the year-to-date anchor, which is the green one. As long as we're above that green anchored VWAP for the year, then the buyers are in control for this year. Starting from day one, the sellers were in control. We saw that flip on Monday, and now the buyers are in control. It wasn't an easy move higher, as we saw a large shakeout, but that shakeout came down to a key level I'd outlined not only on Twitter, but here on YouTube. And by the way, if you're watching on YouTube, as always, like the channel, subscribe, all that good stuff. And I wanted to invite you to a webinar next Wednesday at 8 p.m. Eastern Time. It's a free webinar. We're going to just take a more detailed look at markets, some individual stocks. We'll talk about multiple time frame analysis. We'll talk about swing trades, anchored volume weighted average price, and probably have some time for your questions as well. Meanwhile, as long as we're above this 5-day moving average, you give the benefit of the doubt to the buyers next week. If we continue to, if we do something like this, and even if we see a shakeout and then back above it, I think that we are magnetized to that new all-time high in the S&P 500. The Nasdaq, for its part, the all-time high came late last year with 2 days left to go. That was the all-time high. You can see here on the daily chart on the left, that green anchored VWAP is the same as the green anchored volume weighted average price over here on the right. And that's from the very beginning of the trading for this year. I'll keep that anchored VWAP on there throughout the year, just as I still have last year's anchored volume weighted average price on these charts. Now, as you can see on the Nasdaq, it doesn't make any sense to really use that as a reference point right now. However, in some individual stocks, there is still some value there. Perhaps we can talk about that in the webinar Wednesday as well. It will be recorded. It will be uploaded to YouTube. So if you don't register, it's not a big deal. If you do register, you'll be part of my mailing list, which doesn't spam, I promise. I send no more than 2 emails per week, and it's only when I have a new video if you prefer to be updated that way. Anyways, the Nasdaq, again, buyers are still in control. We've got a rising 20, 50-day moving average, rising 200-day moving average. So as we pulled back, we noted that we didn't want to buy the dip. We wanted to buy strength after the dip. For me, that came on Tuesday after we gapped lower, hit a key level, more on the S&P 500 as I outlined, not necessarily the Nasdaq, but we're talking about the Nasdaq here. You can see we held the week-to-date volume-weighted average price as well, and we have a rising 5-day moving average, rising year-to-date anchored volume-weighted average price. The buyers are in control. There's no reason to think it's not more realistic to continue and break out and make new all-time highs. The trend is your friend. It's more likely to continue than it is to reverse. I wouldn't be surprised, however, if we rally up through that level and then see a quick sell-off, simply because people who are looking to buy the breakout are typically sold into. Just that's the way it works. The Russell 2000, today we had a gap higher and immediate failure. It came right into the anchor from last year's high, and this market still needs some more time to consolidate. As I mentioned, it's down 3.5% year to date, and by the end of the year, Of course, things can change. It's not our job to predict the markets and say, hey, I think that the Russell 2000 will outperform in 2024. My job in 2024 so far has been avoid buying the Russell 2000 because it's below a declining 5-day moving average. It's below that year-to-date anchored volume weighted average price. It gapped up and failed. It rallied through that 5-day moving average, but the 5-day moving average was declining. As I always say, don't trust rallies with a declining 5-day moving average. So next week, perhaps this market can right itself and do something like this and create a little bit more solid support in here. This might end up being a shakeout. I'd love to see that happen, that this would be a shakeout, and then we go in and make create some further support in here and then break higher. If we break above that level, that's where I would personally be looking to get long with a stop under either here or here, whatever your time frame is. Use the definition of trend, higher highs and higher lows. If it's making higher lows, you stick with it. If it breaks below a higher low, well, then you get out because your emerging definition of trend no longer exists when that happens. So on the watch for next week, Russell 2000 as a potential continuation higher. The primary trend is higher. We have a rising 20, 50, and 200-day moving average. The direction of the 20-day moving average actually will change slightly on Tuesday as we get rid of this data. And I say Tuesday because, of course, we're closed for Martin Luther King holiday observance on Monday in the United States. So this market will be forefront for a possible continuation of this move here on the daily time frame and reversal of the shorter term time frame. That's trend alignment. We have a longer term time frame that's still clearly higher. However, the shorter intermediate term trend is still lower. So our job is to avoid that, anticipate as it starts to move sideways, and then participate as the trends become aligned. And once we're involved in it, then our job becomes to manage risk. Winners don't take care of themselves. You've got to raise your stops according to what the market tells us. Semiconductors have had a pretty volatile year, really. We started down, continued down. I think we're down close to 3, 4, 5%, somewhere in there. This week we gapped higher and the buyers maintained control with these higher lows above the rising 5-day moving average. But it's been quite a volatile ride in here. And I would prefer these markets kind of settle down and be a little bit calmer the way they move. The all-time highs for the semiconductors were made at the end of last year, just like the Nasdaq. In fact, they led the Nasdaq higher. They're not leading the Nasdaq so far this year. Maybe they will. Maybe the market's the Nasdaq that is going to see strength in other areas, which will drag it higher. I'd prefer to see the semiconductors continue to be the leaders, but the market doesn't care what I want. Biotechs, we're still in that area where it seems likely we will get some supply and at least continue to correct time-wise, if not a deeper price correction. And going into next week, we have to look at it and say, yes, we have a rising orange 5-day moving average. But on Monday, as we get rid of this data here, that's where we were. That we get rid of that data in the 5-day moving average calculation. So on Monday, what's going to happen? That 5-day moving average is going to start to flatten out midday and then curl lower. So if we get stuck below that 5-day moving average in the coming few days, I think it's highly likely that we start to see a little bit more of a pullback in these biotechs. Some people will start to sketch out an a head and shoulders pattern. And a head and shoulders pattern, as I point out all the time, don't just be a monkey who recognizes a pattern, but instead recognize what it represents. We have a pattern over here of higher highs and higher lows. Here's our higher high. If we see a lower high and then a lower low, it just means the trend has changed. That's it. That's all a head and shoulders pattern means. Forget about, the shoulder and the heads. Look at instead, understand what it means. It means the pattern of higher highs and higher lows on this time frame has switched to lower highs so far, maybe, and lower lows. Now, I wouldn't short below here, definitely. The primary trend is still higher. I look at it and say, I'm going to avoid the biotechs. There's no reason to be a short seller because news and surprises tend to follow the direction of the trend. You might get short in here and then see them squeezed higher. That's not the way I look at the markets, is to get cute and trade against the primary trend. The financial stocks, we saw some earnings reports in there today. We saw a gap higher that got sold into, but no real damage done. Not yet, at least. If we put an anchor on this gap. You can see we're still kind of battling with that. More important, we've got this little band of support in here at about 37.40. If you break below that and hold below it for, let's say, more than an hour or so, then I think it's highly likely we start to see some of the bigger levels on the daily time frame come into play, such as the anchored volume weighted average price from that November 14th gap. That would bring this market down towards about 36.60 right now, but keep in mind that will continue to advance. So maybe 36.75. A good thing would be if it slightly under, if it came down, slightly undercut this low, and then we start to see a bounce and then see where it goes and the next play develops out of there. Energy names continue to be a waste of time, as I've been saying for quite a while here. They broke down hard this week. Got a little bit of a relief rally today, but we still have a declining 5-day moving average, so I definitely don't trust it. Some of the stocks to look at, Apple, we spoke about last week. It's holding in this key area. I'm not excited about the upside, but if you're to get involved in it, you've got to look at it and say, one of these higher lows is where you want to, have your stop. I had mentioned MSOS as my top weed play this week in a video that I had done on YouTube. So maybe some of you were involved in that. That's behaving well. Let's talk about Nvidia. Nvidia was a great trade for Alpha Trends. I'm still long a little bit of this one here, a third that is, with my stop up under this level. It gapped up on Monday. I missed it. I bought it after the pullback Monday morning and got involved at, what was my price? Oh, well, it doesn't matter. It was 521.5, I believe, if I remember correctly. Anyways, that continues to move higher. The dog of the big techs is Tesla, and there's been no reason this year to buy it. It's been below the declining 5-day moving average all year. It hasn't poked up above it for more than even 30 seconds. It's been below that declining 5-day moving average. It's guilty till proven innocent. We spoke about the potential support for support in this area, but as I always say, we only know support after the hindsight. In this case, there was zero support there. It's a level of interest when we get there. And when it gets there, we study it on shorter term time frames and we start to sketch out, as I did, hey, maybe if it does this and then gets above that high and then the 5-day moving average rallies, then I would participate here with a stop under there. That didn't occur. Instead, we saw a continued breakdown, lower highs, lower lows, below that declining 5-day moving average. So it's guilty till proven innocent. And I didn't mean to switch over to ARK. If we look at the weekly time frame, we're coming down to, there's last year's anchored volume weighted average price. That's not likely to hold it, perhaps down to the anchor from the 2023 low. That would bring this stock down to about 215. It's not a level I would look to buy. It's a level I would look down here in the right, get myself out of the way. And I would look for what we always look for and what I always sketch out. I want to see that 5-day moving average come down, flatten out. And you know what? There's a lot of other stocks besides Tesla. You don't have to make money in Tesla to make money in the market. Enjoy the long weekend. And the link for the webinar is down in the description of this YouTube video below as well. Thank you.